Chapter 20 is going to start talking about the accounting procedures we need to do for inventory. And in particular, Section 1 is a bit of a review in talking about the different types of inventory systems we have. And then something new is preparing stock records. Merchandise inventory in a merchandising business like Walmart or OfficeMax, which is the example in your textbook, is the largest asset they have. So it's really important that they keep on top of it and know exactly how much they have in stock, that they're buying at the best prices, selling when the prices are best, to ensure that they're going to have a good net income at the end of a fiscal period. To be efficient on their inventory, they need to make sure they don't have too much or too little. If they have too much inventory, in this example, larger than needed, this means that the business is going to have to spend more money to store that inventory, possibly. They're using capital that's tied up in inventory that could have been invested in some other assets. They have other expenses, taxes, insurance, and things like that that is associated with that merchandise. For instance, if you have to have a large warehouse of merchandise, you're going to have some insurance in case it would go up in flames or it would get robbed or anything like that. And also, if you buy too much inventory and you have it sitting in a warehouse, what if it becomes obsolete? What if people don't want to buy it? Something new and better has come along. Now you've got all this inventory and you need to get it moved, and it's not going to be saleable. On the flip side, though, you don't want to have too little inventory. If you don't have enough, you could lose out on sales because you either don't have it on hand at all, or you have such a small supply on hand you can only sell what you have and you're missing out some more. Also, when you buy in smaller quantities, a lot of times the per unit price is going to be higher. You need to look for that if you're the buying officer in a company, is how much does it cost you per unit? It might actually save you money to buy 10 more of a product that you know you're going to be able to push than buy the 10 less because it just costs more. Now, there's two different ways to determine your merchandise inventory. We have periodic inventory and we have perpetual inventory. And we've talked about this earlier this year, but now we're going to get a little bit more detail on it. The periodic inventory is the actual physical counting, weighing, or measuring of the items. Most times it happens at the end of a fiscal period, but that is a business's choice. This is an expense to do a periodic inventory. Most times all of the staff come in and you have to count, weigh, and measure everything in the store. But now that doesn't help us when we need to order items to sell. So the flip side is what's called a perpetual inventory or a book inventory. This is what we have on paper. So if you go into Walmart, you go into Hy-Vee, you go into Fairway, and you buy an item, they scan it across and it reads the UPC symbol. Well, every time an item is scanned, it's keeping inventory of that item. So if I buy a can of peas and I pay for it and they scan it on Hy-Vee's inventory system, it's going to show they have one less can of peas on their shelf. And usually when they get to a certain number, it's an automatic reorder of that item. Now, I have to make sure, though, at some point my perpetual inventory and my periodic inventory match up. That's why I have to do the periodic inventory. I need to physically count and make sure what happens on paper is what's happening in real life, because people could steal items, there could have been damaged things, we could have donated some, there could have been error in accounting, and we just need to make sure things match up. When I go to do that physical inventory, when I go to count things, I'm going to have an inventory record, and I use this to record the things that I'm counting. So here in this example, this inventory record is for beach totes. So I'm going to pretend I'm at Walmart, and we have lots of different beach totes out there. I have a small one, a medium one, and a large one, and here are the stock numbers for those individual beach totes. I count up how many I have on hand, and then I'm going to figure up the unit price. Typically, the unit price is what we had to pay for them to get them to the store, not necessarily what we're going to sell them for. So if I wanted to know the value of the inventory of beach totes, according to this slide, my value is $2,941.25. That's what I physically have on the floor or in inventory of my beach totes. Now, as we go through, there's going to be a stock record that keeps track of individual items. The inventory records show continuous quantity for a kind of merchandise, and that is then recorded or kept track of on a stock record. There is a separate stock record for each kind of merchandise on hand. You can see that right here. So my inventory record showed all 3 different types of beach totes, everything all together. Well, each one of these 3 items is individually going to have its own stock records. Right here is my beach tote stock record. Notice my stock number is on here, my reorder number. So I know, or the computer system knows, or the ordering operator knows, when I get to 20 or below, it's time to reorder those beach totes. Or excuse me, I'm sorry, I'm going to reorder 20 when I get to a minimum of 10. Sorry, I messed up. Let me say that again. I am going to reorder 20 at a time when I get to a minimum of 10. Okay. Location, rack 45, could mean a couple different things. It most likely means where they are at in the warehouse, because there's someone in an office that's holding this piece of paper, this stock record. That rack number says where they are at out in the warehouse. Depending though on what type of business it is, your warehouse could also be your store, and that could tell you where a customer could go and buy it as well. Now on my stock record, increases and decreases every time something comes in and out. I need to record it on here so that I always have a balance. I always have my running balance. This is just a physical number, not an amount. So notice my new balance on hand of these small beach totes is 22. If I go back to my inventory record and I look at beach tote small, I have 22 right here. So that means my physical inventory and my paper inventory, my periodic and my perpetual, they equal, and they should equal in a perfect world. It's not always going to happen, obviously, because other things come along, other things change, but we do want them to equal. And that's why you go out and physically count those things. Now, when you use, again, that perpetual inventory system, you are using the UPC symbols, and there's a little section about that in your book. Most companies are moving to that. It's much more efficient. It saves man time, and a lot of times you can get the automatic reorder on your items. So it makes you be more efficient as a company. If you are a smaller store, sole proprietor, small town business, this might not be the way that you go. You might not keep your inventory that way, but most businesses are moving to this. So this is section 1, talking about your stock records. So now what I want you to do is go to the work together on your own and work through those items. You're going to have your transactions that you are going to record in your stock records. So stop the video now and go work on your work together on your own.